presentation, I'll do three things. Provide an overview of the bespoke and fit-for-purpose methodology for Proshare's Tier 1 Bank Report 2024. I'll also present the new class of 2024 Tier 1 banks and comment briefly on the banking recapitalization exercise that is ongoing. Okay. The Central Bank of Nigeria does not employ a tier-based classification system for banks in Nigeria. What that means basically is that the Central Bank of Nigeria does not tier banks into whether a bank is tier 1, tier 2, or even tier 3. What the Central Bank of Nigeria does is to classify banks in terms of whether they are systemically important banks or whether their capital is considered to be tier 1 capital. So how did and why did Proshare decide to classify banks? The story goes to 2013, when AfriInvest, an investment bank, decided to classify banks into tier 1 categories. And if you look at the AfriInvest report, AfriInvest stated that there are banks that should be considered to be fugas. So I'm sure we're all aware of banks classified as fugas. That's First Bank, UBA, Guarantee, Access Bank, and Zenith. 10 years after, in 2021, Proshare therefore asked itself, why are these banks still considered to be tier 1 banks? Why are other banks not considered to be tier 1 banks? And we therefore decided that we will take a look at the issue of evaluating tier 1 banks. So in 2022, Proshare produced its tier 1 first or inaugural tier 1 bank report. Here you'll see the AfriVest model for assessing tier 1 banks. In 2022, using the financial reports for the financial year ended 2021, Proshare decided to recalibrate the assessment of tier 1. Now, if you look at the difference between AfriInvest and Proshare's 2022 PBSI, the only additional variable we added was board diversity. In other words, age, gender. Were they important in determining how well a board will perform? We found out actually that statistically, it is a significant aspect of whether a board does well. In 2023, we decided to go a step further based on reviews by our peers and some members of the banking industry and the financial services sector broadly. We decided to go a step further and we increased the criteria to 10. So if you look at the 2023 PBSI matrix, you'll see 10 different items. Now, coming to the most recent PBSI report for 2024, we went even further than that, and we decided to make those criteria 15 in number. Let's look at, based on this new 15 criteria, who actually are tier 1 banks in Nigeria. The Proshare report suggests that we have gone back to what we started off with in 2013 with AfriInvest. AfriInvest had an acronym for tier 1 banks, FUGAS. In 2024, Proshare discovered that the same FUGAS are tier 1 banks. Now, if you look at the analysis here, you find out that Access Bank in our first report was number 1. It was top of the tier 1 banks. In the next report, because of the adjustment in the criteria, Access Bank came to number 4. But in 2024, they came back to number 1. Next chart. For us to understand this in a graphic context, the next chart will explain this further. Right. So, if you take a look at, for instance, we can choose any of the banks here. You take a look at Access Bank. In our first report, they were number 1. By the second report, they had come down to number 4. And by our last report, the 2024 report, they've come back to number 1. But we could also take a look at another bank. Let's assume we decided that we want to take a look at GT, for instance. In our first or inaugural report, GT placed 5th in our tier 1 bank ranking. By the second report, GTB had gone back up to 2 before falling in our most recent report to the last of the 6 tier 1 banks. coming back to the issues that perhaps are very concerning for a number of people about recapitalization of banks and how that recapitalization is likely to affect the Nigerian economy, particularly the GDP. If you look at this chart, recapitalization is not a new concept. Recapitalization had taken place right from 1980, and it went on to the early 1990s. This is what you see here. However, GDP had not moved significantly, despite the fact that banks were continuously recapitalized. So the big question is, does bank recapitalization actually promote GDP growth? If we are going to take the sample of what happened between the early 80s and the early 90s, the obvious answer would be no. But something happened. In 2000 and between 2000 and 2001, the Central Bank of Nigeria decided that it will introduce a concept called universal banking. The universal banking concept meant that, unlike in the past where you had specialized banks, commercial banks, merchant banks, development banks, there will be one banking institution conducting the variety of financial services. So a bank does real estate, a bank does insurance, a bank does commercial banking, a bank does investment banking, and that seemed to have some impact on growth in Nigeria's GDP. And we see that happening. If you look at from 2000, this is the rise in capital, the gradual rise in capital. So from 2000 to 2004, just before Soludo took over, you see a gradual incline, a gradual rise in Nigeria's GDP. Now, in 2004, 2005, the then CBN governor, in his wisdom, decided that, look, Nigerian banks need to be much bigger than they are. We need to grow the economy a lot faster. So what did he do? He decided that from a capital base of 2 billion naira, he would raise the capital base for a bank registered in Nigeria to 25 billion, or roughly 10 times. Now, what impact has that had on Nigeria's GDP growth? This is 2004, 2005, and this is, you can see the steadily inclining GDP. So it does suggest that if banks are recapitalized, there will be significant growth in GDP. So, but let's look at between 2005 and 2023, there's been no increase in bank recapitalization. However, GDP growth has shown a steady increase. Like the company said, why will be addressed by Proshare's research department after this presentation. Right, so in Proshare, we have developed a concept of financialism or financialization. What does that mean? That means that banks can actually translate equity into value. Now, just as typical, let me just give one example here. We see an increase in shareholders' equity here. What is it likely to lead to? We expect it to lead to an increase in loan portfolios and diversification. That's what we call financialism. Now, if that takes place, what will happen to the real sector of the economy? We expect that the manufacturing sector will see higher output, distribution activities will grow, and consumer purchases will increase. Therefore, we argue in Proshare that there must be a great amount of financialism in the system. Here, this chart also sort of gives us an idea of the implications. Banks recapitalize. How does it affect the economy? Banks will increase loans and advances. Those will result into increased manufacturing output, and our GDP will grow faster. How does bank recapitalization affect businesses? Obviously, there will be increase in loans and advances. There will be increase in business output. But to the man on the street, what concerns everybody with overload? So yeah, banks have recapitalized, so what? For those invested in the equity market, we expect that because companies will be doing better, there will be an increase in capital gains, and there will therefore be an increase in dividends, which, if households had invested in equity, there will be a higher household welfare. Okay, Right. So, like I said earlier, we had gone back to the future. When in 2013, AfriInvest started assessing tier one banks, they came up with the concept of fugas. In the last two analyses done by Proshare's research department, this term no longer applied because some of these banks actually dropped off and they were no longer tier one banks. But they were borderline tier one banks. But in our context and in our metrics, they were tier two banks, higher level tier two banks. So let's see what is happening here briefly. Let's look across at capital adequacy. The bank with perhaps the lowest capital adequacy, that doesn't mean that the bank is bad. It simply means that it doesn't need as much capital, is ETI, Ecobank Transnational Incorporated. But who is the bank with highest capital adequacy? UBA. Then we look at total assets. Now, in the early days, Proshare decided that it was not going to look at the level of total assets. What we wanted to do was to look at the growth of total assets. However, in discussing with some bankers, they insisted that no, that to make the index more robust, we needed to put the level of total assets. So we introduced the level of total assets in the 2004 to 2024 metrics, and we can see the total assets of the 6 banks that qualify as tier 1 banks using Proshare's Bank Strength Index. Non-performing loans. The highest non-performing loan is the red bank here. The orange bank here follows, no, doesn't follow next. The ETI follows next, then the red bank here. This is what we're seeing. These are the indices we have used to actually measure the extent to which these banks have performed adequately. Right. So, closing thoughts here. Policyholders have considered big banks with larger economies and faster growing domestic products as a sound argument to make. However, what we have said is that it does seem superficially sound, but it's still unproven. And then we gave the data and showed what I showed earlier. Next slide. We argue in our report that we must realize that banks growing bigger does not necessarily mean that these banks are better. And we saw that occur during the time of the consolidation exercise in 2005. And we saw that again in 2010 when Governor Mohammed Sanusi, CBN Governor Mohammed Sanusi, decided to consolidate banks. So being bigger does not necessarily mean that you are better, but it does give you fighting room. So basically, the takeaway here is that we have gone back to the fugas, the 6 banks that were considered to be tier 1 banks in 2013 by AfriInvest. We're back there. However, if you look at in 2022, you see them scattered more broadly. Fidelity Bank was actually a tier 1 bank in 2022 matrix. Stanbic was also a tier 1 bank. It was actually the 3rd bank. By 2023, we saw Access becoming the 4th largest tier 1 bank. And then we saw Zenith being the 5th. And the 1st largest tier 1 bank